All right, it's 8 o'clock. So live from YouTube channel, this is your daily Forex trading strategy session. Let's go. Boom. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Hey, my name is Wayne McDonald. Nice to meet you. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. I appreciate you. They appreciate you. In fact, the good people at TradersWay.com want you to succeed. Because ultimately, if you're a successful Forex trader, you're a better customer for a broker that enters your trades for you, right? So a trader that comes and goes in a week because they blow up their account, it's not a very valuable customer. One that trades successfully, you imagine trading several lots a day, every day, day after day, week after week, month after month, year after year. That's a much better, much more valuable customer. So it's not necessarily for altruistic reasons, just maybe even for selfish reasons. If you're successful, it benefits other people beyond you. So really, it's a symbiotic relationship, and they understand that. So they're like, Wayne, help our clients become more successful, and I'll do my best. I'll use technical analysis, fundamental analysis, trader psychology. I'll teach you all these things I've learned from trading Forex all these decades, with your overriding goal of helping you put together trade plans, teach you how to put your own trade plans together. And hopefully this helps you become successful. So thank you to the good people at Traders Way. You thank them by visiting TradersWay.com, opening up an account. Takes 30 seconds to get a demo. You can download MT4, check out the execution speed. When you press click the trigger, pow! How long does it take to execute? It's quite fast. What are the spreads? Is it reasonable? If you don't like spreads, you can have an ECN account. Wonderful, right? And then the swaps. Are they paying you or are they cheating you? Well, they're paying you. So you check all of that out, TradersWay.com. Also, I'd like to thank you for the participation that you put into this YouTube channel. It's a community. This is your community. I appreciate that you're here every day and you're asking questions and getting involved and even helping each other. I think that's a really cool thing. I think we have a very cool, special thing here on YouTube. So thank you very much for being part of the community. If you could please do the thumbs up thing, that would be appreciated. If you're new, please subscribe so that when I do these live streams that you get invited. And then always, 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 just this for the sake of your own learning and education, every single day, every time we do a live stream, go back to the recording, maybe think about it for a half an hour, write all the things down that you remember that you learned, or maybe take notes during the webinar, and then go back maybe in a half an hour once the recording is up and document what you learned that day. And trust me, doing this over and over and over like a regiment will help you become more successful and more quickly. Okay? Because your mind doesn't know the difference between sort of real and thinking about the future and thinking about the past. Your brain itself is inside your skull. You have to remember that. And your eyes are just plugged in, right? Your ears are just plugged in. The nerves in your fingertips are just simply plugged into this nervous system up here. So really, it's just receiving input signals, right? So it doesn't know if you're thinking about the future, which hasn't happened yet. It doesn't know the difference. It's the same as receiving an eyeball. If you can think of a yellow Lamborghini and you think of it, you get a picture in your mind. As far as your mind's concerned, you're looking at a yellow Lamborghini, and then you go out on the street and there's a yellow Lamborghini and you're like, now I see a yellow Lamborghini. Yeah, but to your mind in here, it doesn't matter if it's there or a thought of being there. It's still just there in the mind. So going back and documenting what you learned, you're having the same learning experience as the moment you're actually learning it. So now you're really, really learning it. And that's why taking notes and reading your notes, rehashing your notes, all these things are important because you're reliving the real experience over and over and over again, right? So I think in my book there's a chapter called 3 times the Forex, because doing this process at the end of 1 year, you have 3 years of experience. Speeds up the learning. So anyways. So without further ado, so yesterday we talked a lot about day trading, because we're really coming to the end of what I call sort of my seasonal swing trading, right? The monthly swings and the weekly swings. So now I'm kind of just down to day trading, right? Or you day trade your way into new trends, if that makes sense to you, right? Okay. Delo says, Wayne, I purchased your templates at metatraders.com, but was looking for the daily swing trading template with just the green boxes instead of all the pivots. No, I just invented that like 2 weeks ago. Just had it all programmed, and I'm tweaking it, and I'm going to work with the programmer to make my own changes. So that's not out, Delo, but it will be. So if you're a client of MetaTraders and you have the complete toolkit, not just the basic one, the complete one, whether it's dripped to you over a year or all at once, it doesn't matter. I'll put that in there, compliments of the firm. Okay? So don't worry about it. Forget about it. Forget about it. I got you covered, bro. All right? D-Lo. It's a good name. All right. So let's just move on to come. So where in the world are we? Well, everything starts with, do you think it's going up or do you think it's going down? And I don't care what's on the chart. Okay? I have to say it. I know I say it every day, but we have to start there. Is it going up or is it going down? Well, what are we looking at? Euro dollar. Okay. Well, on the long run, I want euro dollar down. Cool. Well, not on the long run. Let's say over the next, how about this? Over the next 8 weeks, I think the dollar could strengthen. Great. I don't really care about euro. Now, we're not looking at it now. This is euro dollar. What about euro yen? Definitely, unequivocally, I would like to see euro yen fall over the next 8 weeks. Okay? Not even looking at it. So this sets everything. This sets up everything. I filter through everything through that lens. Euro Swissy. Well, I don't really care about Euro Swissy, but I think more down. But like Aussie Swissy, definitely down. Okay? What is all this based on? Year-end profit taking and taxation. Is this really based on long-term fundamentals? No. No, it's not. But I'm using sort of a behavioral finance point of view. I believe that people will get out of positions simply because of taxation or year-end bonuses. Remember, if you're trading stock, if you have a stock portfolio, you know, it's not your floating profit and loss that you get bonused on if you're working at a fund. It's the money, because you can't spend the paper money, right? Your stock portfolio is up 30% this year, but no one's got the money. It's just out there floating, right? It's not mark to market. Well, in Forex it is. So anyways, like a stock trader trying to hit year-end bonus will need to get out of a position to collect the money and then get their year-end bonus, right? So I'm kind of baking all that in where I don't think fundamentally it's risk off yet. I mean, think about it. We got the trade deal and all that kind of stuff. And the world is still flooded with free or cheap money. So why would the stock market go down in a scenario like that, right? Cheap and free money, low inflation, there's no reason for this to go down yet. So anyway, so on the longer run, I think the bull market still has some legs, But there will be profit taking over the next, really, it's not even 8 weeks, five or 6 weeks, right? So anyways, that's my plan. So everything's going to be filtered. So you might be looking at it this way, okay, which is valid. But I say, okay, if I were looking for a reversal of this market, that's where it would be born. Okay, that's the birthplace of the reversal. Because whoever bought it down here is supposed to exit here. And from there, why not be down for the next 5 or 6 weeks, right? So I'm going to look at it that way. Who's right? Because I get this question a lot, right? Well, which one's right? Well, they're both right. They both are. They just is. They just is. Okay? What it comes down to is what is you. Right? What is you? Samuel, it's Australia. They have a heat wave every year. And guess what? Then there's going to be forest fires. Yeah. Just welcome to Australia. All right. So let me get my drawing tool. So really, you see, guys, this is both up and down, depending on your point of view, depending on from where you're observing. So if I dropped into a 5-minute chart and only focused from here to here, it's going to be definitely more down than up. But if I'm focused way out here on like a 1-hour chart, this spot here is definitely up. Okay, so you have to decide which one are you going to trade. So I'm kind of looking at it this way, okay? And that sets me up for trying to predict the future. And if I'm trying to predict the future based on my lens, if you will, I'm thinking more like this, right? Oops, well, this is... That's based on the lens I'm using to filter through all the other information. That's the future that I would be predicting if I were a bear. Now, if I'm a bull, I'm going to filter through that differently. Okay? Which one's right? I don't know. And what I've been trying to teach you over years and decades is it actually doesn't matter which one. It's not being right, it's being consistent with your strategy. So even if you're a bull, right? Bulls are going to have their opportunities too. And bears are going to have their opportunities. And if you do one of them well, you will have opportunities to get in trades and be profitable. You don't know which one is going to be most profitable, meaning which is the bull going to make more money than the bear? You don't know that, and it's not determined by you. You can't influence it, right? You're not trading billion dollar size trades. You're like, I'm going to drop another B on this. I'm going full yard, right? You're not doing that. You can't influence this. The money's just too big, right? You're a drop in the, not a drop in the bucket, you're a drop in the ocean, right? But you can still control where you get in and where you get out and still get opportunities to make money and with low risk, even if you're quote unquote wrong of whether the bulls or bears are going to win. Okay? It's kind of like, taking a shot. In sports, take a shot. You got a clean look, okay? Take a shot. Just take a shot. If you're a bear, take a shot when you got bearish shots. So next week, if you got something like that, take the shot, right? And what'll happen if you're wrong is it'll do this. You'll lose a little bit of money, but you won't lose a lot of money. Okay? So anyways, that's the idea. So we talked about this quite a lot. So now it's been, what is it, Wednesday? So I said on Friday, actually on Thursday, I think it was Thursday when I met with the swing trading group, right? We were way up here, and the whole point of the swing trading group last Thursday was, do not be certain this is going up. I know that all the news we've been waiting for says up, and we got all of that, and everything we've been waiting for, but that's not what the charts say. And don't be certain. Being certain is dangerous. People that are certain make giant mistakes because they have a sure thing bet. But it's a cliche, the sure thing never shows up, right? So I said, really? And I think in the free webinar, I said, look, this might be a buy the rumor, sell the news kind of fact, right? And I said, trading should be boring. And the boring trade you do month after month after month is simply buying that at this price. This is such a straightforward on this euro dollar trade. This is like basics. Basics. If you're not setting up your trades this way, the beginning of the month at those types of prices with those types of patterns, if you're not doing this, you're not trading properly. And everything else is influenced by stuff like this in the bottom left-hand corner. And if you're living inside these candles, you're not trading properly. I don't think you will, on the long run, be successful or happy, even if you are successful, because you're going to be very inconsistent, and the amount of work and energy you put in your trading will be very high. You're going to be exhausted. And of course, being exhausted is high risk. It's going to lead to mistakes. But even if you're better than break even, fighting inside of all these little candles, I don't think you can sustain it. By the way, I tried it for years and years and years and years. Sitting in front of my charts at least 12 hours a day. I did that for years. And I can tell you, it's a very difficult thing to sustain, let's say, more than 1 decade. Right? You see what I mean? So this should be like, there's your monthly swing, and there's your monthly swing target. Look, you spent a couple of hours setting it up, and then that was done for the whole month, right? And now we're up here, and this says you should get out. Merry Christmas. Go on your vacation. Done, right? And then there's trades inside of that. This predicts this. This predicts this, right? So on and so forth. And this should supersede everything else. So like a bull is probably going to look to redo this. Okay? And that might happen. That's cool. But remember, everything is superseded by the higher time frame. This says the uptrend is over. It doesn't mean it is over. That's just what it's saying. So now, is it going to do this and breach this and give us this? I don't know. I really don't know. That's why you have a plan. That's why you set up ambushes. So if you're a bull, I can tell you this is going to be your buy zone if you're a bull. Not that you should buy. None of these things, none of the indicators on the charts tell you what to do. And I know when you're new to trading, that's what you're looking for. The indicator to tell you what to do. There is no such indicator. You are the one with the power to make that decision. And from there, technical analysis is just a tool, right? Your hammer doesn't design houses. Okay? Your hammer's not an architect. Your hammer's very useful for punching nails into wood, but it doesn't build the house. It doesn't design the house. It doesn't decorate the house, right? So you're going to need to use you to make these decisions. So if you look at this and say, well, I'm a big believer in this uptrend that we've been doing. This uptrend has really been going on since the 3rd week of August, right? So you're like, this has been going up since the 3rd week of August. I think it will continue going up because it has been going up. Well, I caution you to that, but if you're going to bet on the trend, or let's say trade the trend, I'm a trend trader, so I'm not going to argue that. I'm just going to say, well, in my opinion, I think you're missing a little bit more, like when does the trend end? But that's my alpha versus your alpha. Doesn't mean we're right or wrong, okay? But if you're going to continue, I'm not going to argue with that. To be a bull in an uptrend, and that's technically still bullish, I get it, then you would be looking to buy somewhere around here, and this is your trade plan. The first one should get you to the mean, right? And then maybe even beyond to the future standard deviation above the mean. That's cool, man. That's cool. If that's your strategy, that's your plan, that's cool. That's really cool. You got it. I hope you're successful. I hope you make a ton of money. I hope it works. Because if it doesn't work for me, if I'm thinking down, let's say in the near future, let's say I'm thinking this, and you're thinking the other one up, that's cool. I'll only make a little bit of money for a short period of time, and you'll make more money for a longer period of time, and we'll both be happy. Right? You'll make more than me, but it doesn't bother me. You're not taking my money. And then, right? But if I'm right, I'll make more money. But if we do our job properly, we'll probably both make some money, regardless of being right. Okay, I'm not trying to be right. I'm trying to plan my trades based on strategies. So if I'm a bear, and this comes up to resistance, right? Think about this. If I'm a bear, and this comes up to resistance. So let's say my next level of resistance is here. This is my trade plan. Okay, this is my trade plan. Okay? I don't know if that's right. But think of it this way. It drops to the standard deviation below the mean, which is also this monthly pivot, which is also this weekly pivot. So will it go up? It's also a role reversal. Will it go up? Yeah, probably. But even then, it doesn't matter to me, right? Because I need it to come up, and then what? So let's say it comes down, then it goes up, and I'm ambushed here, right? I'm setting up an ambush. Right? You see that? We're still here. I'm thinking it'll go down, down, down. Then I think it should go up, up, up. Then if it gets here now, and I drop into a 5-minute chart or a 15-minute chart when I'm in the circle area, and on that small time frame, I see a reversal pattern, like a lower low, lower high, or I see a moving average crossover, or an oscillator crossover, or whatever I use to confirm price action or changes in trend on the small time frame. That would put me short here. Okay? Now think about it. I was a bear, I let it fall. I was a bear, I let it bounce at support. I'm a bear, I let it hit resistance. I'm a bear, and then on a small time frame, observe a reversal on a small time frame at the resistance in the overall downtrend that I perceive. What's the likelihood I'm going to make money after all of that? Well, there's a pretty good chance I'm right. But what if I'm wrong and it does this? Well, I'm so close to the resistance that what? I lose a little bit. Well, cry me a river. I'm not trying to get a high winning percentage. I'm trying to get in trades where most of the time I make something with small levels of risk. But if I'm right, I got at least that kind of juice, maybe more. Why? Because this was all prefaced on a monthly profit-taking strategy. Okay, I might not be right, but I'll probably make money. But if I lose, I'll just lose a little bit. But I got the shot. I got the opportunity. But it's not video game. You understand? So let's pick on a different one. Yeah, gold. Oscar Mike, huh? Gold. Here. Well, I guess if we did like euro dollar, let's look at euro yen. We'll do all the yens, in fact. Say something, I'll give you all of you. All right, cool. Here's euro yen. Did you get what? All right, this is where we left it off, day trading, right? You guys remember yesterday? Yesterday? Lots of day trading stuff, right? Do you guys remember that? You guys remember that? You and I did this yesterday. Day trading, right? Do you remember, like, we were having a conversation, right, we were having a conversation. I think I was saying something like, New York, you have to give up New York? Like, we were talking about, could I trade Forex if I lived in Hong Kong, right? I'm like, I love me in Hong Kong. And the idea is Hong Kong gives you, you can trade Asia in the morning, and then by afternoon you're trading the European session as it opens. But the downside to Hong Kong is you miss New York. And I'm like, I don't care about New York. New York's a street fight, right? And I'm like, by the time we hit New York, I'm already done. I've usually made my money by New York, right? Do you guys remember this whole conversation? And I'm like, look, right? So anyways, so what I did is I said, look, I usually trade an Asian fade. If you go back to videos from 2005, 2006, 2007, you can hear me talking about the Asian fade. I trade it the same way now as I did then. It's amazing, right? And I'm like, look, I'm usually done by the time New York shows up. And what I did is I showed you an example of day trading. And what we did is, based on the information we had yesterday at this time, I was predicting today. So please confirm that you fully remember this whole conversation, that you're reloading it back in your chart. Where I said, look, it's New York now, but I'm not concerned about today. I'm concerned about tomorrow. Everything I'm doing is for Wednesday. On Tuesday, I'm not concerned about Tuesday. I'm not even I'm done on Tuesday. I'm looking at Wednesday. I'm setting up Wednesday's trades, right? Then I went through and I said, well, where's my plan A? Where's my plan B, right? And then I drew it there, right? I drew it for you. I said, look, you could use Fibonacci, you could use this, you can use that. And I kind of like 6 different ways you can skin this cat, right? And I said, plan A, plan B. So you check this out. Okay, check this out. Plan A or plan B. I would sell, right? Just like I drew for you. Check it out. Plan A was right here. Oh, snap. I'm in it. Ha ha! I went step by step by step by step by step on Tuesday, showing you how I set up Wednesday, with the preface that by the time Wednesday shows up and we're in New York, I'm already done Wednesday. I'm moving on. Check it out. Based on yesterday's analysis, I said we'd be here in New York today. Well, Jicka Slim Shady. Huh? Look at that. Here we are in New York, 24 hours later. Well, shit. I'm practically done. New York. It's just opening. Yeah, I know. I'm already done. Money's already in the bank, y'all. Gas in the Giardo. I would never buy a Giardo. Gas in the Giardo, baby. Right? I think I'd buy an old like Murcielago or something, but right? Now, was that helpful now that you saw what I put together yesterday and now where we are today? Was that helpful? A step-by-step day trade. Then smash the likes, yo. Right? I'd love to see, like, let's say, 2,000 people watch this video, the live or the recording, and I get 100 likes? No, I get 50 likes? No, I get 100 likes. 100 out of 2,000. So if you learned anything, just common courtesy, you would click the like button, right? Tell Tell YouTube this is the stuff you need. This is quality content. This is better than the, I made the yellow look, I made 1,000% trading MT4 on my phone. Yeah. Okay. Yeah, don't smash it twice. All right, cool, right? Look at plan B. Didn't get it. See? Plan B, we never went that high. Oops. So I can remove this. Can't lose money. Chicka chicka. Well, the thing pure mathematics is it went down too fast. That can be an issue. In fact, I set this up a little bit late. I was doing something else. I guess I was preparing for my big presentation yesterday. And yes, it did go well. Thank you very much. But anyways, I'm like, oh, I should probably do what right? So anyway, so by the time I was a little late setting some of these trades up. Okay. Yeah, Barry, like there was a Euro Turkish lira trade that I broke even on a couple of days ago, right? But here's the good news. I broke even. I made no pips. But I made, like, I think it was 500% return on investment. How does one make 500% return on investment when they break even on a trade? Interesting. Yeah. So you might laugh at me like, Wayne, you broke even. I'm like, I know, right? I know. I feel so bad. I feel so bad about that. I broke even. So bad. All right. CAD is interesting. CAD, I think, is more bullish than the other pairs. So I'm wondering if Canadian dollar versus Japanese yen hits up here, if it drops from there. So anyways, let me change this template. I think I have it. Yeah, the watermark is different. Cool. So I think it's got some more up before it heads down. And remember, I'm thinking down, so I'm not interested in the up. Euro yen we just did. Okay. This is the one I was late on, what I was telling you about. While I was doing the other trade, you can see I missed the opportunity. Where was it? Yeah, I missed the opportunity. I guess I missed it in here. I was setting up here and somewhere. Somehow I just missed it. It was a timing thing where if I hadn't planned on taking the trades we planned out on this account. And then I thought, oh, I should probably do it. And by the time I set it up, I was already late. I missed this. So here's the interesting thing. You can see some of these orders are not quite on the right numbers. You have to remember when you're looking, I'm looking at this area here. I'm always looking at tomorrow, and they're predictive. We don't actually know the high, low, and close for Wednesday because it's still Wednesday, right? So these things adjust, especially when you have a breakout move. And so anyways, that's why that happens. And so yesterday, think about this. Let's actually go back farther than yesterday. Let's look at this. Let me just back up. My whole conversation with you was that we had all this awesome news, right? And I said, be careful, be careful, be careful. Don't be certain, don't be certain. I said, amateurs are going to be certain this is going to go up. And I think amateurs are going to lose lots of money. Be careful, don't be stupid. This is your opportunity to be the calm, logical, intelligent trader, right? I said, this is your year-end test. You have patience and discipline, or you don't. You can't be mostly patient. Okay? You're either patient or you're not. You can't be usually disciplined. You're either 100% disciplined or you're not disciplined. You guys remember all this? Look, 100% reversal. 100% reversal. What are your thoughts? Good coach? I could have been preaching easy money, go, 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 trade, trade, trade. I'm sure some of you were eager. You're like, that's it, green light. I'm like, no, 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 no. No. You guys remember? I need to know that you remember. Because if you don't remember, it never happened, right? So like, if I change my template now, let's go back to like this kind of stuff. I said, if you're so eager and you're so aggressive and you're so certain, why do you do it after the fact and not be aggressive and certain when you got the obvious, stupid, easy trade that's boring? Why aren't you ridiculously certain and aggressive here based on your trade planning of swing trades? You're not certain there. So I teach you to be certain here. 21 above the 55, right? That's where you're bullish and aggressive. So why aren't you bullish and aggressive here? Why do you wait for this? And now you're like, okay, now it's moved up 1,000 pips. I'm going to be bullish now. Now? What the hell are you talking about? Smart money's getting out. They're selling into a crowd of fools. Right? So I need to know that I'm changing the way you think, and that once I am successful at that first stage, then I will start to influence your behavior. If I know I'm having an impact on the way you think about trading Forex, then the next stage is I can have an impact on your trading behavior. Smart money does the boring trades. Dumb money waits for the excitement and then loses. Okay? Not this time of year, Osborne. Not this time of year. You're supposed to be culling your herd. You're supposed to be thinning out your portfolio. Okay? So you might be in trades from 5 years ago. I wouldn't say get out of those trades, but you do need to do some year-end rebalancing. Okay? So what I showed you, the portfolio that we built in August is gone. It's gone. I told you I'd get out, and I did get out. So now I'm building sort of a short-term portfolio, if you want to call it that, between now and let's say February, March, I don't know. And then I will move to a mid-year strategy. And then once we get through summer, then I'll build a year-end strategy, okay? If that makes sense? Hopefully. All right. What do you notice here? Let's go back 24 hours. So I have to turn these things off. Okay, 24 hours ago. 24 hours ago, we were here. Okay? And I said, you need to create a plan A or plan B based on tomorrow. So I said, I don't care what's happening on Tuesday. I'm already done. If we're down here on Tuesday, you should have sold up here on Monday. So by the time New York shows up, we're down here. I'm like, who cares about New York? New York is about taking profit and getting in the next trade. You can't just show up and like, what's going to happen today in New York? Let's do some trading. That's not how it works. So I went through great detail telling you how to day trade. Cool. So we looked at yesterday's prices in which I would consider to sell if I'm still a bear. And we came up with a plan A and a plan B. Okay? Everybody following me? So we're down here and I'm like, I don't care. I'm not even interested. I'm not even interested. It's dead to me. That's where I get out, not get in. So then I said, well, plan A and plan B for the next sell. So the general idea was this. Cool, right? So plan A got triggered. Ho, 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 ho. Plan A, Baba. We got plan A. Bear in mind, this took me about 4 seconds to plan. I know, right? Why is it so easy to plan? I have a bias. I only sell at resistance. So where the hell's the next level of resistance? Right there. Boom, there's a plan. Like, that's all it is. I'm a bear. Is the market bearish? Yeah, it looks like it on this time frame. Cool. So where do we sell? At support or resistance? Resistance. Where's resistance? What's the trade plan based on tomorrow? So I looked at tomorrow. I looked at the next level of resistance. I said plan A, right? And I had multiple reasons why a test of 72 might be resistance. So I created a trade plan. Okay, so you see, looking at this now, let me delete this. There's today's selling pivots. But I was doing this yesterday. That's why I have it at these prices. Because remember, the pivots on Tuesday, Wednesday's pivots for Tuesday were still predictive. Because we hadn't created the actual lower low yet. Me. There's something in there. Anyways, so I'm a little off, but that's what the idea at that moment was. That's what this looked like then. But things changed because it made a lower low. Okay, that's cool. Oops. Okay. So here we are now in Wednesday. Do you get the understanding now that we planned Wednesday up in here, right? We planned Wednesday up in there in the middle of Tuesday. And then in fact, for an American, Tuesday morning, I set up Wednesday's trade. Now Wednesday shows up. We're already in the money. Okay? We're already in the money. Oops. I'm not setting up Wednesday's trade. I'm already profitable and Wednesday just started. Is anyone having an aha moment, or is this just like rehashing the obvious? Well, I'm leaving it there, Peter, to show you guys. Too obvious? Is it too simple? Pure mathematics is like too simple. Okay. Oh, not too, but No one has had an aha moment. No one's willing to say, oh my God, I need to change my behavior. No one's had like a moment like that, like, oh my God, now I've had some sort of breakthrough. Now I see what I need to be doing. Now I see the way. No one's had a moment like that just now. No? Everyone's like, great review. Oh, great. So you're all doing this. Sweet. Okay. So here it is. Wednesday, London Open. Nice, right? Cool. Okay. This one is now break even. So, but we were short yesterday in New York. I either got it here or here. I don't remember which. This is Asia. So I must have got it there. Delete. Doesn't look like it. That would be London. Yeah, New York. So anyways, this one we got. It's break even now, but again, I wanted to leave it in to show you that I did it. Okay, so let's call this one that I'm wrong. Let's change. I hate this color. Okay, let's indicate this as I was wrong. My trade plan was to sell at this price. Can you see that I had an opportunity to either move my stop, but not only did I have an opportunity, I was up about 40 pips profit. Can you see that? And here we are now in New York, because the idea was I wanted to show you in New York on Tuesday, I'm planning Wednesday, right? On Tuesday, I'm already planning Wednesday. And so I wanted to show you what happens if you let it hang around to Wednesday in New York, right? And in this case, it went down. I was profitable about 40 pips and it came back. And now I'm break even. I'm just slightly profitable. So I'm wrong. But I had a chance. I had an opportunity for 40 pips. Right now, I'm like +8 or something. But the fact that I'm selling at resistance in a downtrend protects me. Okay? Look where plan B was. Plan B, plan A, yesterday. So now I should be concerned though, right? Because yesterday's trade plan was this. Plan A was that. Okay? And it worked partially, but not completely. Now we're back here, and it may be a failed plan, right? Because it didn't hit the target, and it's made 100% retracement over the day. Michael says, do I have use average daily range to target day trades? No, I do not. I use pivot points, or I just use trend. So like, for example, that's a day trade, right? And by the way, this is the Asian session we talked about yesterday. Okay, remember that? I said I love trading the Asian fade and stuff, right? So really, the way I would traditionally trade this, like what I taught even 12 years ago in webinars, okay? The classic sort of Wayne move is down all day. So all day Tuesday was down. Then it fades up into Asia, and I sell it hard. It used to be Tokyo Open. Now it's a lot more the Shanghai Open. But that's the Asian fade right there that I talked about earlier. That I was teaching you earlier. Okay? That's the classic, right? And that's where like Fibbits come in. You know, we talked a little bit about my old Fibbit idea and stuff like that. That's where Fibbits come in. Okay? Blah, 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 blah. That's how you do it. Okay? Now, as far as targets, there's a day trade. But you have to remember, I have plans that supersede day trades. So let's look at this from sort of a different point of view. Now, the first part of this is it's not a trend trade. It's a counter trend trade. Okay? So I don't really like that. So I have to find something more likable. And the more likable idea is that this is January's plan A. So January's plan A looks like this. January's plan B looks like this. So if I'm a bear. So if I am a bear, I know this is a counter trend. I'd like this to go down a little further, probably only into this roll reversal. Then I think it would go up, and then I think it would go down. So do I use average daily range to predict profit-taking zones? No. No, I do not. I use analysis. If I'm right here, I'm going to be very right. And if I'm wrong, I'm going to break even. Michael says, so jam your stop at -5 after it drops, then you're set. Basically, the question you have to figure out is when is it appropriate to jam your stop? No, I don't want to look at CAD or CAD Swissy. And let me explain why. You have to listen to every little piece of information I tell you. I want to be a bull in Swiss franc. Okay? I want to be. Doesn't mean I am, but I want to be. That's part of my hypotheses. The second thing I shared with you today is I think CAD has more bullish upside than the other pairs. So based on that, if I think this is going to go up and this is going to go down, then nothing's going to happen. And I don't want to look at it because God forbid I might see something that makes me want to trade it. I don't want to trade it. Right? I filter everything through this. You have to think of it this way, like a business. Okay? Think of it as a business and a business plan. You're the CEO and your executive team comes up to you and they offer a whole bunch of ideas of what you should be doing and how you could be making money. And at the top you're thinking, does this fit into my core values of the firm? Right? What else? Does this fit into our core competencies? Right? And then people are like, we should get in the recycling business. You're like, that's nothing like what we do. We're not even in that industry. Why would we do recycling? Oh, because we make a lot of money. You're like, dude, that's not what we do. That's not even related to what we do. And the next guy comes up and he says, I think we should design bras for women that are more comfortable and easier to size. You're like, dude, we don't make clothes. We don't make underwear. Why would you offer that? Oh, because we can make a lot of money. But dude, it's not what we do, right? So maybe it's not a great analogy, but what I'm saying is my core competency, my core value in the moment is that there's going to be profit taking that strengthens the Swiss franc, the Japanese yen, and maybe even the US dollar. But I'm a little uncertain about that because of what's going on with the Fed and the government and whatever. But usually it's those three things I'm looking for. So I am not looking for other bullish currencies. You understand? Lulo FX says, why does CAD have bullish sentiment? Well, first of all, if you don't know that, you need to do the research. Okay, Lulo? So Lulo, go to the Bank of Canada website and spend, 10 hours reading stuff. Print out reports, watch speeches. But in less than 10 hours, you'll become pretty knowledgeable when it comes to the monetary policy by the Bank of Canada. So if you don't know that, go know it. I'm not going to tell you. The second thing is you just open up the chart. If you're looking to be a bear on CAD and you open your chart, you're like, that's not bearish, done. It wouldn't even matter why. Who cares why? Because I can only speculate why. Oh, well, it's bullish because people think this. Well, I don't know what people think. And is it really to do with oil prices, or is there an improvement in the economy, or was there a change, or is it luck, or, we don't know any real. I can only give you potential reasons why and educated guesses why, but you should do it yourself, right? But at the end of the day, it doesn't even matter because you don't know for sure. So the way you go through all of this is you're like, okay, I want the yen to get strong. Therefore, anything with the yen on the right-hand side should fall. And you start with like CAD. And you open it up. Does that look like it's going to fall? No, done. Why? Who cares why? Right? I mean, I know I'm being facetious. But at the end of the day, if you don't know why Canadian dollar is strong, then you should go figure that out. You should know this. Okay? I'm not going to tell you. Okay? And the second thing is, if you want to be a bear here, then it doesn't even matter. Who cares? So now your job is to wait for it to become bearish and then be a bear. If you're a bear, be a bear. But it's not bearish now, so don't be a bear. That's the real answer. If you want to be a bear, totally cool. Is that bearish? Not in a bajillion years is that bearish. So you wait. What'd you do today? Nothing. Well, it's better than losing money. Okay? And you could say, well, where's the next level of resistance? Well, let's actually leave these levels on the chart. Okay, where's the next level of resistance? Would you sell if you saw a reversal pattern up there at 83.64, 83.65? If you saw a reversal pattern up there, would you sell it? MHB says, CAD is very overbought. Good. But don't sell it until it's bearish. Okay? Yeah, you're like all day long. Then that's a plan, guys. Is that going to happen? I don't know. But if that happened, what would you do? Would you sell it? That's a plan. You just created a trade plan. Okay? So now you wait. And when this turns bearish, it's not bearish now, but when it turns bearish, or if it turns bearish, you'll be ready, willing, and able. And you will destroy the bulls still remaining on this trade. If there's still a bull up here, they probably don't know what's going on, and you will destroy them, and they will transfer their wealth to you. And I would be, if I were me and I was a bear, and I was basing all this on profit taking, I would say, There's no way they're going to keep buying above 83.64 at year end. There's just no way. So instead of degenerately gambling and selling there, I fully expect in a situation like this to see a reversal pattern on either a 5-minute or a 15-minute or an hourly chart, whatever you want to do. And I will sell that. I will sell that hard, confidently. But I ain't going to do it today. Okay? What if it does this? Well, then I'll sell here. Oh, look, that's another trade plan. All day long. Trade plans. Has nothing to do with now. Do I sell now? Who cares about now? What do you mean now? There is no now. Okay? If I'm a bear, I'm going to wait for consolidation, breakout, pullback, roll reversal, drop it like it's hot. Hot to go, HOTTOTO. Okay? I see it. I see it. If you just trade it short now, you're gambling. Okay? So what I do is I go trade something else, which I did. So what are you missing right now? What are you missing right now? Look at this chart. We'll do oil in a second, okay? Well, Mr. High Volt, it's very easy to stop that if you have the strength to do it. It's very easy. You do not trade unless you're at support or resistance, and you do not trade unless there's a reversal pattern at that support and resistance. Okay, 21.55 cross. Okay, what else? What are you supposed to be doing in New York on Wednesday? Michael's got it. What's the key? Michael says roll reversal into tomorrow's sell zone. Yeah, you're not thinking about today. Today is already done. You leave today for the amateurs. Today is Wednesday, so you're already planning tomorrow's trade. Okay? And you may have missed it. You're already too late. By the way, you're never too late. You either get it or you don't. Not mean like mentally get it. Your trade either sets up properly and puts you in, or it doesn't. It doesn't matter. It's not your fault. But because you only have trade plans, right? But anyways, this is tomorrow's trade. What do you stink? By the way, there's only 74 likes. That means most people are not enjoying this webinar today. Maybe I should just shut her down. All right, thank you. More people are putting in the likes. Thank you. Yeah, got it, Newark. Thank you, guys. We just went from 75 to 92. I appreciate that. Thank you. Tony, don't press it twice, press it 3 times, 5 times. Thank you. Now we just hit 100. All right. 2/3 of you guys like the webinar. 1/3 are indifferent. Thank you, Tech Tech. Thank you, guys. Okay. Cool. So you should be now following on. In fact, let's just reuse yesterday. Let's just reuse yesterday. All right. So first thing you want to do, or first thing you could do, okay, is measure the swing. Okay. The second thing you can do, right? You don't have to do it this way, but oh shoot! Just trying to grab this thing. Come on, MT4. Well, that'll work. Okay. All right. So the next thing is you look at from the bottom of the fib into the sell zone. And then the third thing, the sell zone into the new target. Okay? So this we can get rid of. No, not that. This. Delete. And this we can get rid of. Delete. Okay. Go into a smaller time frame. There you go. That's tomorrow's trade plan today. Okay. You can see our sweet spot is traditionally the 3A2 to the 618, as you know. That's our sweet spot. This is yesterday's trade zone. I'll delete that. Okay. Here's the overall trend I drew for you yesterday. So that seems to still be in play. So for Wednesday, you want to sell somewhere between 121, 121, what is this? 90 and 122 basically. So you're selling a retest of 122. Okay. So I don't know how to say the person's name. A little happy face Forex person there says, I'm a bull in Euro Yen. Okay, that's cool. You wouldn't buy in these conditions though. You understand? At the very least, like, I'm not saying you can't be a bull. I'm saying under these conditions, you would not be a bull. Okay? Now, things can change. Like, for example, what if you got a reversal pattern up at that price? Oh, at 121.50? Yeah. At least, even in the short run, even for a few hours, it would go up. Maybe even for a couple of days, it would go up, even if it stays bearish, right? Well, I don't want to look daily because you're so backward looking at this time frame that you're not predicting the future, you're betting on the past. Okay? It's not about betting betting on the past, right? So I'm planning based on tomorrow's price action, basically. Okay? And if I look daily, you know, these things, like we're talking about the difference between May and December, right? Like, it's too backward looking. It's not incorporating new It's not incorporating new fundamentals and all that kind of stuff. You're not incorporating even seasonality. So you have to understand, like, for example, I told you I was a bear on this before it went up. Then we hit our targets, and then I said it's dropped. And now, we want to become bearish and look for our trade plans and all this kind of stuff. And based on seasonality, I'm a bear for the next few weeks. So that's my alpha. And if I go here to a daily chart, well, that doesn't incorporate all of that, right? That's not incorporating seasonality that hasn't happened yet. So to me, that's too slow. I'm not saying it's not right, but like if I was trading this technically as a bull now, as a bull, I would need an up, a down, and an up, and I'd look for a 21 kicker. Okay? That's how I would do this. If I were me, I would do that. Which means I can still sell a 122 and take it down to maybe 121. I still have at least 100 pips before I would expect to be a buyer if I was trading euro yen as a bull on a daily. Okay? So at the very least, I could sell this, make 100 pips on the way down, and then buy it and catch the turnaround. Okay? Right, Heath, right? Heath is like, seasonality has nothing to do with charts and technicals. Exactly. Or even really fundamentals. That's another thing I want to say is like, if I were fundamentally bearish on euro yen, that would mean I'm fundamentally bearish on global macroeconomics, which is not true. So it's not a fundamental play. So I might still be a bull, but I ain't a bull now and I ain't a bull here. Okay? By the way, thank you for subscribing. I heard that. Thank you for subscribing. Welcome to the Forex.Today YouTube community. How do you study seasonality? I don't think you can. So I only call it seasonality because I recognized patterns that I've been doing in my trading for 15 years or more. And I learned that there's repetitiveness. And I realized there's probably some logic, things like taxation. Every year there's going to be taxation. And I know that forces people to make decisions they may not want to make, but they have to do it because of year end. Or business cycles. There's an 8 to 12 year business cycle. There's a 16-year real estate cycle, and then there's 75-year super cycles. And I'm like, oh, there's cycles and everything. And then I thought, well, can there be an annual pattern? Can there be times when I'm buying things on a regular basis, and are there times when I'm selling things on a regular basis outside of the normal fundamentals? And sure enough, I found that to be true. And I thought, well, what else is like that? And of course, well, farmers. I think of farmers all the time. Farmers don't know the weather. But their job is to grow something and produce a yield that's profitable. They need to increase yield per acre. That's their job. And that's their goal. They aim to do it year after year after year. Increase yield per acre. And they know they want to plant soybeans, or they know they want to plant corn, or they know they want to plant wheat. Cool. So they know what to do. They have the right equipment. They have the right skills. They can plant corn like nobody's business, right? And they have the right combine with the right attachments to harvest. And so they got the right tools. They have the right skills. They know what they want to do. They have clear objectives. But they don't know things like weather. They can't predict the future. But they do know, generally speaking, when to till the soil, when to plant the seeds, when to fertilize, when to pesticide, what year, what time of the year should they be seriously considering harvesting. Do they know what day? No. Do they know what week? No, not really. But they know near the end of September, depending on how everything else happened all year, they might, they'll probably be harvesting. But again, if it's a dry season, maybe it comes early. If it's a wet season, maybe it'll come late. But they generally know when it'd be a good idea. And then they start looking at the facts as they get there. And then they're like, today. Like, in fact, I watched a documentary on growing wine in France. And there's one dude at the vineyard. Every day he goes out and he's running his fingers across the leaves and he's pulling a berry off the vine and he's tasting it and he's looking around and he's thinking, he's like, one more day. One more day. We'll leave him on. We'll harvest tomorrow. And the next day he comes out and there's like 100 workers ready to go. And he tastes it and he's like, one more day. And then all of a sudden the day comes and he's like, now, get these grapes off the vine. And all of a sudden, boom, they all go out in the field. Click, click, blop, blop, click. Buckets and buckets and buckets. And they're like, now, go, 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 go. And it's that sensitive, like down to the hour that they start picking. And so we're kind of like that, guys. Like, I have a general idea when things are likely to go up or when things are, but I don't know like geopolitical risk or any kind of political risk and all this kind of stuff, all these variables that can come in. But I notice some sort of idea, like a farmer, I know when to plant, I know when to harvest. So like taking the example of starting the swing trading group in the 3rd week of August, that was a time to plant seeds. And I told everybody, and I said, I challenge you in the swing trading group, by the end of the year, you should have at least 20 trades, all long yen pairs, meaning you should be long euro yen, pound yen, Aussie yen, Kiwi yen, CAD yen, everything yen, and then all the Swiss francs, right? Pound Swissy, Euro Swissy, Aussie Swissy, Kiwi Swissy. We don't know if they're going to go up, but we're here to plan these things. We should be planting these seeds. And you're going to let them grow until at least Thanksgiving. You're not even going to think about getting out until Thanksgiving. And then if you're really lucky, you can stay in till the 2nd week of December. Okay? Not even going to think about getting out. I challenged people. Why all these things? Well, the 3rd week of August I felt was a reasonable time to plant seeds. Then you have to let the seeds grow. Then you have to nurture the trades and let them go. Let them grow. And then I know when it's getting late in the season and when to start harvesting. So I think I harvest mine on December 1st. December 1st. Last year it might have been December 12th. I know 3 years ago it was December 16th. So I don't know exactly when, like a farmer doesn't know the day, or a vintner doesn't know the exact day they're going to harvest grapes. But it's a very serious decision, and they pay very close attention to the smallest, most minute details, and then they make a decision, they pull it. Pull the grapes. Can't go back. Boom, get out of the yen pairs. So now we're going the other way. Seasonality. So I don't know what else to call it besides seasonality, but remember, I invented all this crap. I didn't read it in somebody else's book. So now what kind of thing, right? Okay. So here's a failed one. No good. Okay. What about tomorrow? Well, we're above here. That makes me nervous. So I'm going to mark that, and I'm not interested in it. Okay? Let's do a different one. Pound Swissy. So see, yesterday in the New York period, in the New York time frame yesterday, this is how narrow the box was. See how narrow the box is now? That's as much information I have. Not much. So it was this narrow. But I said, look, if it comes up, I want to be short. It's not much information. I didn't have as much as I normally would have. But you see the logic? And they didn't get triggered. So I could try again here. Okay? But I'm not. But I want to show you the logic of down, 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 up, up, sell. Down, 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 up, up, sell. See, the sell that day isn't the day, it's the day before the day you would have got the sell. And then down, 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 up, and you know, whatever. And I didn't get the entry. But remember how many people, like, you got to remember this, guys. You just have to burn this into you emotionally. Lots and lots of traders were certain this pound was going to go up. Oh, the election, Brexit. And the whole time I'm like, whoa, 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 whoa. Don't be certain. Buy the rumor, sell the news. Okay. We'll go out here. And once again, let me zoom in a little bit closer. Based on yesterday's analysis, where's my drawing tool? Based on yesterday's analysis, this was the sell zone for today, but we knew that yesterday, but yesterday we were down here. Okay. So what was the trade plan yesterday in New York? What was the trade plan 24 hours ago? Down, 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 up, up. Of course, we wanted it here, ideally, and then down. So now, looks like I actually got put into the trade. Now, it's New York, and we're just getting the entry. I don't like that. See, we were supposed to be making money by now. In fact, we should really be done by now. And this trade plan yesterday has just set up. I've only now gotten in. But that's not the trade plan, right? Okay? Failed trade plan, right? I could have bailed on it. London was supposed to take this down. You understand? London was supposed to take it down, and that didn't work. Failed. So I could have bailed on it. I just wanted to show you planning. Okay? Cool. Let's do gold and oil and then call it a day. So I hope these webinars are helpful, guys. All right. So again, this was supposed to go down, 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 up, up, Asia, fade, and down. It didn't. So I want to walk. So anyways, let's do oil. Okay. Tell me why. Okay. Oil's up. Let me see. Does this have anything to do with OPEC production cuts? Yes, Osborne, Trader's Way has amazing swaps. Fantastic. Yeah, of course this is going up. OPEC cut production. Do you guys remember? I did something like this. The price of oil, the numbers of the amount of oil per day. Demand is constant because demand on the short run is constant when it comes to oil. Every day, people need oil, gasoline for their cars. Every day, fuel's needed. I mean, it's It's generally constant. So you can only have an exogenous supply shock. Okay, so here's an example. Here's supply 1. An exogenous supply shock is something outside of normal supply and demand changes the supply. In this case, OPEC comes out and they're like, yeah, we could produce it, a certain number per day, but we're artificially cutting back production. We could produce more, but we're not going to. So you move to supply 2 from this many barrels per day, right, to now this many barrels per day. So you go from S1 to S2, which is less. So let's say 1 million, 2 million, 3 million, 4 million, 5 million, 6 million, 7 million, 8 million per day or whatever, okay? So what happens? What happens when you cut back? Well, you get new equilibrium, right? So the old equilibrium price was here at $50 a barrel. Now, because of supply moving, less supply in the world market, the equilibrium price moves from here to here, right? So now you get price 2, and now it's $60 a barrel at this many barrels versus this many barrels. So supply goes down and price goes up. Okay? So based on that, which I explained on the day of the OPEC meeting, based on that, this should go up. Oh, look, it went up. Well, how nice is that? Okay? Also, if you're a swing trader and you're a bull, you'll know this. It's amateur hour, but I got to highlight it. This is your buy zone. This is your conservative target. This is your aggressive target. So will it continue going up? It could, but it shouldn't. Well, Michael, it's not even that it doesn't have to be true. It just has to be anticipated. So if OPEC comes out and says they're going to cut, price will go up instantly. It doesn't matter if it's true. Now, cutting back production might take, it might take 3 weeks for that to actually impact the global market, because how big are inventories? So one of the things you can do is go to the EIA website and track inventories. I know you guys do this, right? I've showed you 100 million times. You can track inventory data. And by the way, there's seasonality to oil inventory data. So just imagine all this oil sitting in Cushing, Oklahoma, right? There's a certain inventory and it gets drawn down at a regular anticipated rate. So how quickly does global supply now of oil, that global inventory of oil, not just Cushing, Oklahoma, now think of everyone outside of America oil, right? Think about oil globally. It's literally a liquid that sits in drums or in huge containers. And people use it every day. They use some. How quickly does it get drawn down? Because if oil prices go up, someone might have 3 months worth of inventory and they're like, hey, I loved it at $50 a barrel. I was buying, but at $60 a barrel, I don't want to buy. And I'm good right now. So you don't need the oil. You have 3 months worth of inventory. So every day you're watching and watching prices. Now you know, because you're a user of the commodity, if prices come down, you're going to buy more. You see what I mean? You're a user, so lower prices make you buy more. Okay? It's not a Geffen good, but if you're a user, the lower the value, the higher the demand, really. So anyways, someone's making decisions. So how long does the reduction in supply going to impact global inventory? There's a lag to that, okay? So we'll find out in a few weeks, but prices still go up because of the anticipated future lack of supply. We're pricing in what will happen in 3 weeks or in 6 weeks or 9 weeks. They're pricing that in today. Okay? Is that? Thank you for subscribing. I appreciate that. Welcome to the community. And I should cover gold. Gold. Let's do gold. All right. By the way, how did I do on this plan? Remember, I drew take profit while this was straight up green. Ha ha ha. Nice. I shut that down, huh? Shut it down. Shut it down. I shut it down. That was great. Good trade. Nice move. All right. Ain't nothing but a heartache. Ain't nothing but a mistake. Okay? Okay. Well, the TBM, another way of looking at this is from the higher time frame. So let's get out of this. This might be easier for people to see. So thank you for asking the question. All right. All right. This is monthly now. This is the monthly buy. This is the monthly sell. And we're more than halfway through the month, let's say. Are we supposed to be on the central pivot point halfway through the month? Oh, TBM. We just discovered something huge and massive, TBM. Okay? You're missing a huge piece of information. So this is good, TBM. No, guys. No, we're not supposed to be at the central pivot point halfway through the month. Absolutely not. That means we're not trending. You're telling me halfway through the month, nothing's happened in the month. Absolutely not. This is not bullish. It's not bearish. If it was bearish, we'd be doing stuff like this. Actually, let me redraw that. I take that one back. It shouldn't be like that. It would have been more like this was down. Oh, come on. It would have been more like this, 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 and this. Okay? If it was bullish, it would have been this, 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 this. We're on what, the 18th today? Or is it the 19th? It's the 18th today, isn't it? It's the 18th, and we're still at 1475. This ain't going nowhere, and it ain't going nowhere fast. Well, but they're forward-looking, Max. They're leading indicators. Okay? But if this is easier for you, then great. Yeah, it just, okay? But I can tell you what's supposed to happen based on this daily chart, for those that like the daily chart. If you're a bull, it needed to break through, pull back, and up there. But that should have probably happened by now. Okay, let's do this a little thinner on this time frame. So this should have happened by now. I think there's more bearishness than bullishness in this. So I'm looking here, and I think it should do something more like this. But it hasn't done either, so it doesn't really matter. Bulls had a very obvious buy on the first day of the month. And by the way, I teach you guys how to do that. Okay, that's a very, very important entry if you're a bull. It's aggressive. I'd rather you be doing that in an uptrend, but it's definitely not a sell. Okay. So anyways, I look at this and say, there's got to be something better to do with my money than that, than buy or sell that. Okay. And that's it. That's how you trade Forex, guys. Yet another day. I've been doing this for almost 15 years, every single day, trying to help you be successful. So thank you for being part of the community. Make sure you like and subscribe and comment. Remember, comment on the videos. Leave a comment on the videos every single day. Document to yourself what you learned. If you do this for yourself, you are likely to become a better trader, a more disciplined trader, and it'll probably happen more quickly. So once again, you're either disciplined or you're not. So you either leave it every single day, and some of you guys leave comments every day without fail. That's a good sign. But you should also, instead of just saying thanks or something, document some sort of takeaway, a bullet point, a sentence or two. What did you learn? What do you want to stick away in your brain so you remember it forever and ever and ever? If you do that every day, you will speed up your learning, your success, and you'll achieve your destiny more quickly. So anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful Wednesday. I will see you tomorrow.